So, what's keeping you from scaling your business as large and as profitable as you'd like it to be? Today, we're going to discover, with help of somebody who's scaled multiple businesses and successfully exited from many of them, how to scale and then, scale so that you can exit later on. What do we have to do to change our thought process, to change how we're looking at things, to change our systems? What do we have to do to scale? And today we have with us Colin Campbell, who wrote the book, Start, Scale, Exit, Repeat. I love that. I do remember that the shampoo bottles used to say, wash, rinse, repeat. So I love that. I think most entrepreneurs love the idea of repeating their business, which is the difference, Colin, I think, between an entrepreneur and a small business owner is the entrepreneurs, they want to do it multiple times and they want to scale. So, Colin, if you would, first of all, welcome to the Wealth Ability Show. And please give us a little of your background because it's a pretty storied background.
Well, thank you for that, Tom, and thank you for having me on the show. I really enjoy talking about scale because the reality is the vast majority of companies in the United States fail to scale. In fact, we're talking about 99%. And yet, if you have the right people, if you have the right story, you have the funding, and you have the right systems, you can scale your business. And this is something that can be learned. There is a formula for doing it. I go back to when I was 36 years old. We were running a publicly traded company, and our company had flatlined. We were doing about 18 million a year or so in revenue. My brother and I ran this company, and we flatlined. And I called a lifeline, a friend of mine, and he says, "You know what? Why don't you meet with my coach?" My coach is a gentleman who runs a company called Rhythm Systems, and they do goal setting, and they do a lot more. They do a lot of strategic planning as well. So I agreed to meet with him in Vegas, met up with him, and I started talking to him because at this point, one of the board members had already come to me and said, "Look, you're a little bit over your head. We're going to need to hire a professional CEO to scale this company." And so I said to the coach, I said to Patrick Tian, I said, "Patrick, can you just help me get the board off my back?" And he goes, "Well, Colin, in order to do this, you're going to need to do the following." And it seemed like a lot of work. I said, "I don't think my executive team's going to go for that, right? But can't you just give me the short version? I don't want to pay all that kind of money." Sort of like, you're going to the doctor and you're saying, "I want to lose weight." And you're saying to the doctor, like, "I don't want to do the hard work. I don't want to eat the right foods. Just give me the pill. That's all I want right now." And the reality is, he said no. He said, "I'm not going to take you on as a client unless you do it unless you really do it. Unless you really, really do it." And so we decided, I said, "Okay, we'll do it." And we began with 2 days of strategic planning, 88 days of execution, a 3-year goal, 1-year goal, quarterly goal, individual goals. We had a status for all the goals. We implemented company cultures, values. We implemented the right type of hiring practices, profiling of leaders, surrounding yourself with good leaders. And it culminated in the sale of that company, which we almost tripled in revenue. And we sold it to a Fortune 500 company for 17 times EBITDA. Now, Tom, listen to this. I'm in this boardroom, a Fortune 500 boardroom, and there must be about 20 people around. And I'm doing a presentation about all the systems and goal setting and everything that we've got going. And the CEO of this publicly traded company turns to his team and says, "Guys," and he's pointing at the board, "this is what I'm talking about. This is the kind of culture we want to bring to our organization." And they're the company buying us. They're a Fortune 500 company. And I just felt like, victory. Because believe it or not, when you actually implement these professional systems, not only will you scale, but a buyer's going to look at the Swiss clock and say, "You know what? I'm going to give him a premium for it because he's running the company so efficiently." Well, this all culminated into a speech I gave at MIT in 2012 to a group of entrepreneurs. And in that speech, I was asked to talk about how I was able to start, scale, exit, and repeat over and over again all of these businesses with the right timing and everything. And I was a bit nervous going in. I just broke my leg skiing. It was a bit of a weird situation. And I walked in. It was like a 4-hour lecture. And I began to put pen on paper, and I began to break it into quadrants. And this idea that, at start, you've got a story, you got people, yourself usually. You got to get a certain amount of money to get going, and then you got to implement some systems like KPIs. You got to know where you're flying, how you're flying the airplane. But in scale, it's a whole different thing for story, people, money, and systems. And then exit, it's a different equation again, or a different formula. And then the repeat, it changes all over again. So I put those in quadrants, and that became the basis of a 10-year journey to write the book, Start, Scale, Exit, Repeat. And very proud of it. Today, it's been a #1 bestseller on Amazon in 15 categories. We've won 24 global awards, and it's been recognized as being one of the top books for entrepreneurs in 2025.
I love it. That's great. So let's kind of go back to the basics here.
All right.
You've looked at a lot of businesses. And some of your own, and I'm sure a lot of businesses for other people. And when you look at it, what do you think is preventing an entrepreneur typically from scaling outside of the how to do it? What's preventing them in their mindset or what kept them there in the first place?
It's funny you asked that question. I'm always asked that question the most. Like, what's the number one thing I can do to scale? Well, the number one thing that holds entrepreneurs back from scaling, it's entrepreneurs. It's themselves. They're truly the number one problem. Think of this. In Start, we go through this period where we've got some success. We know what we're doing. We've grown the company to $1 million in sales. We've got 12 people. We've been successful. I've done all the sales myself. That's classic, by the way, that the entrepreneurs tends to be the salesperson as well. I've done all the sales myself. I can keep this going. Well, you know what ends up happening over time? If they don't have a good operator, the wheels begin to fall off the bus. Or if they're the only person, then they become the bottleneck. So there's a mental shift that needs to take place first. And the first thing we need to do is ask, do we want to scale our company? Do we truly want to scale the company? Okay, if we truly want to scale, then we're going to need to think a little differently than we did in Start. And when you understand that, the difference in your thought patterns, then you begin to think about how you can actually scale. And so scale is broken down, as I mentioned earlier, into 4 sections: the story, the people, the money, and the systems. Let's start with the people. When you are in Start, it's all about delegate tasks, not responsibilities. But when you go into Scale, it's all about delegate responsibilities, not tasks. Now, let me give you a very clear example of this. My wife and I own a school. She runs it. I'm not involved in it. It's her thing. And it's a very successful school, very high rated, greatschools.org, all this stuff. But she got 16 employees, 100 students, and she's responsible for everything. She has not read the book and delegated the tasks. So 3:00 every morning in the middle of the night, she's up. I swear, like for years, it's been happening. She's still up. Last night she was up too. Again, like this is a concept of, if you can think of your company in terms of responsibilities, not tasks. So yeah, there's all these tasks that need to occur, especially in a startup when you're winning the baby. But when you want to scale it, we need to start saying, okay, in the school example, and I talked to her about this yesterday. Why don't you hand the infrastructure over to another individual? That means if something's wrong with the air conditioner, they're not calling you, they're calling the other person. If something's wrong with the taxes or whatever it is in the building, that other person is now responsible. So you don't have to think about that particular component of your business. And if you begin to break down your businesses into multiple areas, you can begin to delegate those responsibilities. So I'm going to delegate, this person's going to manage sales. This person's going to manage technology. This person's going to manage human resources, whatever it is. But it's no longer you're the bottleneck. You're no longer the one person doing everything.
So Colin, what do you think is the reason that entrepreneurs do that to themselves? Because I see the same thing. Okay. And I see it, I have a group of franchisees, and, their issue is that they want to do everything. How do you break them out of that, out of that thought process where for your wife, for example, how do you break somebody out of this thought process that, hey, I need to be in control. I need to touch everything. The buck stops here. All of those thought processes that go through every entrepreneur's mind at some point.
Well, one of the chapters I have in the book is about personality profiling. And I say the very first thing you need to do is profile your own personality. Okay, so we don't want to understand what your personality profile is. And, ego is a big play. Ego plays a big role here. Look, I'm the one who can get all the sales. I'm the one who can do this. I am the one who built this company. It plays a bit, and you know what? And yet, when we begin to think about scaling, we need to stop promoting ourselves and promote others who are capable at doing these jobs, even if we're able to do it better than them. We still can't do everything if you want to scale. Yeah, we might be the best salesperson in the company, but the reality is, if it's limited to our time talking to customers, and we're also not doing other things in operations or wherever it is, then that's a problem. Now, sometimes it's better to be just the best salesperson in the company as the owner, and then let the rest of the company go. I'm okay with that, right? But unfortunately, we're control freaks, right? We're all dominant control freaks, and we want to control every aspect of our business. And by the way, it's worked. It's worked in Start.
Right.
That's what worked by controlling every little aspect of the business. That's what's made us successful. But that's not going to make us successful in scale. We're going to need to learn how to trust people. So the first thing we want to do is build a team of people around us. First of all, just identify, and I use the term in the book, try to visualize 10x. Say you're $1 million. We're going to try to visualize 10 times your size. Okay. Just imagine 10 times your size. And then we're going to want to visualize the roles in your organization at 10 times the size. Now, this doesn't mean you go and hire 5 people around you right away, because you probably don't have the budget to do that. But we know 10 times the size, this is the kind of organization we want. These are the kind of people we want. And these are the personality profiles of the individuals we want. I really want your listeners to think about becoming amateur, what is it? Amateur psycho and analytical people, like people who can measure profiles or personalities, almost like an FBI agent, right? So we're going to want to think about the types of profiles we want. And typically, if we are, once we understand our profile, and DISC is the methodology that we use in the book, you can use Myers-Briggs as well. But for instance, I'm a dominant personality and highly analytical. Okay. I'm not good at sales. I know that I'm not good at sales. So I'm going to need to hire somebody who is good at sales, who can run that aspect of the company for me. Um, there are some who are good at sales. In fact, the vast majority of entrepreneurs tend to be DIs, or dominant and influential. But they also, by the way, have the hardest time scaling their businesses. I find that interesting. But they need to hire the operator. I can't tell you how many DIs I've met who have never been able to scale because they just couldn't find an operator. They couldn't find someone to do the back end of the business and own it, by the way, take the responsibility for it, because they're not good at operations. They're horrible at operations, but absolutely amazing at getting sales. I can't tell you how many entrepreneurs I've seen like this. So we're going to want to identify those positions. We're going to want to identify our personality, their personalities, and then we're going to want to bring the team together, and then begin to launch systems. Okay, so if we get the right people in place, then we need to start to launch the systems. And that's what I talked about earlier, this idea of 2 days of strategic planning, 88 days of execution. We use a goal-setting platform. We have a very inexpensive solution for startups that I don't get any money for, but he's a friend of mine. He runs a company called Rhythm Systems. It's the same coach. They do goal setting. It's $500 for the first year, to run this platform. It's called Rhythm Systems. They don't advertise it. Just say you heard Colin or whatever. They will get you set up with this. I truly believe that any startup has the ability to do this. They just got to get the right people and then implement the right systems. One of the other things that we've made a lot of progress on as companies is culture, and using culture to help scale your organization. And I thought the best example in history was one by Zappos. Zappos was they had 10
Truly.
core values. It's a tragic ending to the story of the founder, which I talk about in the book as well. Mental health challenges. We won't touch too much on that today, but the culture statements that you make can help you scale. And let me give you an example of that. When we were at Hostopia, we began to grow and grow. We went to 600 people. And yeah, it's one thing, your culture when you're a small office with 5 people, pizza in the afternoon, whatever it is, that's your culture. You don't really need to formalize any value statements. But the idea of coming up with 4 to 6 core value statements, not a mission statement on the wall that nobody understands. These are 4 statements that people can create that are rhythmic in nature. In fact, I even created if you go to personalityprofilesai.com, I created a chat GPT uh, a little program to help you. It'll simply ask you these questions. It uses the data that I have from my book and from other sources to help you create these 4 to 6 core value statements. And it's called personalityprofileai.com. It's free. We just do it as a fun custom GPT. I don't know if you play with those at all or not, but
Yeah,
uh,
absolutely. No. And I love this, Colin. I found that when we get the values right, and I love that you say it, it has to rhyme. It has to be easy. Um, ours are pretty simple, like have fun with it and own it and honor it and break it and simplify it. Those are our 5 values right there. I
right
just
there, and you do it. You do it right away.
rattle them off, and everybody can rattle them off because they're simple, right? Because they rhyme. It's just I so love that you're saying, get rid of that big, huge mission statement that nobody remembers and focus on these, 4 to 6 values. I think I truly agree that it's 100% these values. I have a question though. So on culture, outside of values, we have a little interesting, um, uh, something interesting going on in the world today, which is that we have so many people that are not in the office. And so culture in the office, certainly easier than culture when it's remote. Do you have any recommendations for people who either want to have some remote employees because, hey, they can hire people that they couldn't otherwise hire, they could pay a different that it's a lower expense if they hire them, but they may even get better people. Maybe a challenging hiring environment like it is, for example, in my business, CPA firms, it's pretty challenging to hire somebody. I mean, if you're not in a big city, it's very difficult to hire the people that you need in order and keep them local. So what are some ideas that you have for that culture and making sure that culture is instilled and followed when you have these remote employees, or is it even possible?
No, I'm a big believer in it doesn't matter where, especially in start. You're up against big competitors, big corporations who can pay a lot more than you can. They got a lot more budget than you do. So what we're going to do is we're going to wrap our business and start around our employees and not the reverse. Now, at scale, it can be a little bit different. It's, different situation. Um, but even so, in scale, I go back to those 4 to 5 key pillars. When I traveled all over the world at Hostopia, everybody knew them. Everybody in the company knew them, and people were using them in their lexicon. They use them the day to day. So with a customer, I'd often see on the tagline at the end of, and they did this on their own. We didn't tell them to do this. One of them was when our customers succeed, we succeed. And so, I remember I saw one employee put that on their tagline of their signature of their email. When I was in Ukraine, because we had a lot of programmers, coders in Ukraine, and I would ask them, what are the values, and they knew the values, they knew the core values. See, when you're small, it's easy to maintain, but when you become bigger,
Right.
it's harder to maintain that culture, and you have to find a way to scale the culture, or else you're going to have problems as well. So we've talked about the people, yourself. We've talked about the systems. The systems, the one system that I really think is a game changer is AI, and surrounding yourself with AI, wrapping yourself in it, wrapping your employees in it, using it as much as you possibly can. And it continues to confound me how much you can do. I use the example of Tony Stark from Iron Man.
Right. Hmm.
You know how he slaps on that Iron Man suit and he
Yep.
becomes from a normal person into at least we're talking about the first movie, but he goes from a normal person into this like superhero, and he can do so much with it. Well, even as a solopreneur, that's now available to us because of AI. But a lot of my employees around me, they don't know how to use AI. They don't, they know they're not, um, they're not trained on it. They don't understand it. And I think that's one of the systems that we can implement in our business to really help us scale. So I don't want to go, and I want people to be aware that has been a game changer in all my businesses. In the 20 companies I'm invested in right now, that's been a game changer. And I keep pushing it harder and harder. And I keep finding there's still more and more people who can use these kind of technologies and really help them scale the business. So we talk, the next thing we're going to need, we got people, we got systems. We're going to need to talk about money. Okay. 82% of companies fail because of cash flow. Okay. And here's a little thing that might drive you a bit nuts, especially if you're in the subscription business. The faster you grow, the more money you're going to lose. Okay. Understand this. The faster you grow, the more money you're going to lose. And so we're going to want to inform investors responsibly. Like when we talk to investors who understand and get the right investors, get the right type of investors. One of my last companies was .club. It was an alternative to .com, .net, .org. It was .club. We sold 1 million domains, $10 a year per domain. We sold to GoDaddy and all those other companies that resold them for us. And, the first 4 or 5 years, we lost money. And we literally lost $3.5 million the first year, then $2.5 million, then $1.5 million, then $500,000, and then we made $500,000, then we made $1 million, then we made $2 million, then we made $3 million, then we sold to GoDaddy. Right? It was that exactly like that. It was a formula. And when you seek money, you want to seek money from the right type of investor. So we have a really comprehensive chapter on this in the book about raising the right type of money in the right situation. But one of the things I want most investors to think about when they go down this path is a concept called liquidation preference. And you're probably aware of what I'm talking about here with liquidation preference, but I am amazed how many entrepreneurs don't think this through when they get an investment. You know that 75% of venture-backed companies fail? You would think that with their venture-backed, they've hit the lottery, right?
I'm surprised it's that. I'm surprised only 75%
fail. But that's still, to me, it's staggering. And understand they also have liquidation preference. So even if there's success, they still get paid out first. Right. That's what liquidation preference means, is that you're not taking an equal risk with your investors. Your investors are getting paid out first. And this is a reality with Start Engine, Our Crowd, those kind of, crowdfunding engines and whatnot. It's part of a reality of an environment, a market today that is very, very poor. We have a very tough market right now to sell a company. We do a time to sell index, which we publish on our newsletter once a month on Startup Club. And it's interesting because it's all empirical. I've spent my whole life, I'm digressing here, but I spent my whole life starting, scaling, and exiting companies, and I've done it the right way and the wrong way. So now we actually track, based on IPO data, a time to sell index, and whether it's a strong buyer's market or strong seller's market and whatnot. And we've got a very, very strong buyer's market right now. It's not a good seller's market today. It's also very difficult to raise money in today's environment as well. So, and high interest rates have been killing small businesses across this country, and I've seen it happen across the board. But raising the right type of money for the right situation.
So give us a couple of thoughts on what's the right type of money and who are the right type of investors.
Perfect. All right. So I'll tell you my favorite format is doing a Reg D filing for sophisticated investors. Okay. So what we're talking about is and it sounds scary when you say filing with the SEC. Okay. But it's not as complicated as you might think.
It's actually pretty simple.
They're actually not as bad. And then I always believe it's important to put a private placement memorandum together. Now, I paid $20,000 for my private placement memorandum to a law firm 9 years ago at .club. I'm doing one right now. I've written the entire thing using my own brain and AI, and I'm still got to go back to the law firm and add on the documents and subscription documents and that kind of stuff. But here's an example of how AI can help you with this. But my favorite form is to do a Reg D filing, private placement memorandum, solicit securities to smart investors. I literally, going back to that example, I raised $7 million in 30 days using my LinkedIn contacts only. I sent out to 35 separate LinkedIn contacts, closed 27 investments, and there was no liquidation preference, by the way, Tom. No liquidation preference. And here I was taking the same risk they were taking. All those investors, by the way, made 440% return on their investment in a sale that occurred to GoDaddy about 3 years ago. So they all did very, very well. Now, that is my favorite. I've not done a Reg CF yet, but Reg CF allows you to raise up to $5 million. And generally, if you're using a crowd, like a site like Start Engine or Crowd, they're still going to require liquidation preference, okay? But you don't have to use liquidation preference. If you have a customer base, a large customer base, and you're able to solicit securities to that customer base, and you think you'll be able to sell stock, that's a possibility as well. I do say though that if you're into the Reg CF, considering the complexities of the documents and stuff, a site like our Crowd or Start Engine actually can help you do that.
So if we could, if I can just pause right there for a minute, Colin, so that everybody understands what a Reg D offering is, because I 100% agree with you. Actually, I'm in a Reg D raise right now for one of my companies. Can we just walk through basically what makes them smarter investors, because they're accredited? So if we can walk through that, and then the number of investors, et cetera. Just real briefly.
Of it's based on your network. A lot of it's based on your network, right? So what I loved about this is, and I'm a big believer in setting up an advisory board for your business because it doesn't cost you anything. It's a lot easier to get people on an advisory board than on a board of directors because people don't want to be sued, right?
Right.
So getting an advisory board, but also I'm a big believer in using your customers to help you grow your business because they're your best employees. They're free. They're your investors. So when we raised $7 million from 27 investors, you see my communications to the investors. Okay, guys, I need some help with this. I need some help with that. Some of them even became customers and actually bought premium domain names, and they help support the company. I like the network effect.
Got it.
Of having that support. Sometimes it can drive you nuts. I know that. Especially those investors are just, always, nitpicking you, but there is a way of managing investors. So it's not as intensive because you really do have to focus on the business and the company first. And then your investor relations is sort of a secondary thing. But I really do like having that network effect as well. Look, there's a lot of other forms we talk about. I think the one chapter I like the most in the book is the customer funded startup. And I interviewed John Mullins, who wrote the book Customer Funded Startup, right? For the book. We interviewed about 200 people for this book. It was not just Colin's stories and how he blew up $1 billion company and this, that, and the other. There was a lot of other things in this book and a lot of other stories and a lot of other interviews. And over 90% of companies on the Inc. 5000 have never received venture capital funding, and they've been self-funded. So you can self-fund. You can use your customers to help you self-fund. You can use, you can get very lean, in your business and your operation to help you self-fund. But my favorite is having your customers pay you. I'm involved in one company where they did a 3-year license of their software to a Fortune 1000, Fortune 500 company. They paid like $400,000 up front for this 3-year license, which basically funded the company for the next 2 years. It is possible. Like, it's amazing.
Hey, best example of this would be Tesla, right? I mean, look at how much money they raised for the Model 3 by getting all those deposits up front from their customers. That was free money for them.
Exactly. All right. So we've covered the people, we've covered the money, we've covered the systems, but we haven't covered the story. How's your story changed from start to scale? And I usually start with story. We're going backwards today, okay? But that's okay. Because we started with you as the person, as the entrepreneur, but story, there's one chapter in the book called How to Find Your X Factor. And I often encourage people who are in start mode to start thinking about what their X factor could be. Now, what is an X factor? X factor is something unique and different that you have that nobody else in the market has, that gives you an advantage. Vern Harnish, who wrote Scaling Up, he talks about the X factor being a bottleneck in the industry. You identify a bottleneck. Give an example, like Domino's Pizza, 30 minutes are free. We owned a pizza restaurant in our family at the time. We said, it's impossible. They're going to go bankrupt. Well, guess what? They're the largest pizza company in the world. Um, National Car Rental. Have you ever used National Car Rental? You show up, you go in the parking lot, you get in the vehicle, and you drive out. There's no lining up, right? That you're eliminating the bottleneck of the time it takes for a business traveler to have to get a car at an airport, right? So what we're going to do is we're going to want to think about ways we can offer something different. Another one of my favorite stories in the book was a story about Joe Foster, who founded Reebok, and we become pretty good friends. And he in the book he talks about in 1979 he got his company to $9 million in sales. Okay, $9 million in sales after 19 years. And this was 1979. And then what he did is he went and he applied for some awards. It's 1979. He won 3 5-star awards in Runner's World. Interesting. Reviews. Okay. Awards. Okay. They decide to go into a new space. He calls it the white space, which was designing shoes for women's aerobics. No company had ever done that before. And they were all doing running shoes. So he decided to design shoes for aerobics. And guess who wears the shoes on national television? Jane Fonda. And I asked Joe, I said, did you pay her for that? She goes, no, she paid for her own pair of shoes. Like,
Wow.
you can't make this stuff up. Went from $9 million to $900 million 4.5 years later. In fact, it became the largest shoe company in 1985, 86, and then Nike after that just totally trounced them. But the fact of the matter is they went into a space where no one else was. They were offering something different, going into the white space, as Joe Foster calls it. So if we can find that X factor, it could make a huge difference for us. Now, it's not easy. At Hostopia, that publicly traded company I was talking about earlier, it took us about 6 years to find it. See, what we were doing, we were a platform that offered hosting and email to companies like AT&T, Vodafone, the big telecoms. And we did all the small business hosting and email. And the biggest challenge we had was migrations. So you try to pitch them your platform, but they're like, yeah, but we got all these emails over here. What are we going to do? You know, how are we going to move them over? And a big contract came up with a company called Earthlink. And we were told a day before that we were going to lose the contract. So, you guys are going to lose. You did a good job. You spent 6 months pitching us. You have the best solution, but you know what? You're going to lose the contract. So my CTO and I got on a plane. We flew down to Atlanta. We went to lunch with the buyer. He was a mid-level executive buyer. And he, by the way, had a two-seater car. It was a Wego. It was electric cars, one of the first electric cars. This is like 15 years ago. And so I sat in the trunk. My CTO sat in the front, and I sat in the trunk going to the restaurant. So do anything it takes to get the deal. We get there, and he says, look, the reality is, da, da, da. I says, well, here's what we're going to do. We're going to guarantee 100% migration. What? We're going to guarantee you a 100% migration. See, they had 80,000 websites and maybe say 1 million email addresses. I said, for every website you lose through the migration, we'll pay you $350. At that time, that was the fair market value of a website. Now, you can, if you start doing the numbers pretty quickly, you could go bankrupt pretty fast, right? So here's the secret to the X factor. And it's not easy. One, it's got to be compelling, okay? But two, you've got to dramatically change your organization. You have to transform your organization. And man, did we transform our organization. Not only did we win that contract, we won AT&T, Vodafone, British Telecom. We won all the rest of them. There was a domino effect in the marketplace. Once we figured out our X factor, we won them all. And our competition just totally went away. We became like a standard in the space. And all we did was figure out the needs. Our buyer was not a telecom. Our buyer was a mid-level executive who was worried about losing their job. And once we solved the losing the job problem, we began to win all the contracts. And then that was it. And then we re-engineer, we became the best in the world at migrations. There was no one who could touch us. And then that was it. It was just game over. And that's what Domino's Pizza did. That's what National Car Rental did. And if you can figure out that X factor, nothing more than that can change your trajectory of your company. It's phenomenal.
I love it. The
I
book.
love Blockbuster too, right? You know, Blockbuster and Netflix. You're old enough to remember Netflix was not an actual online download movie.
Right? No, 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 not at all.
Blockbuster was the big one. You go
Right.
there and you go get your videos, but Netflix would mail you them,
Right.
your videos or DVDs to your home. So Blockbuster is in the business of videos or DVDs, and Netflix is in the business of DVDs. But then Netflix says, wait a minute, I'm not in the business of DVDs. I'm in the business of providing online entertainment. I'm in the business of providing entertainment at home. It doesn't matter if you get it through the mail-in product or you get it through digital. I don't even know if they still have the mail-in program. That would be interesting to look up. But the reality is they became this huge behemoth, and Blockbuster went bankrupt, right? So sometimes your X factor's got to also be something that's going to lead you to the next level. You're going to catch the next wave, or you're going to use the piece of technology to make your company scale.
I love it. So the book is Start, Scale, Exit, Repeat. Our guest has been Colin Campbell. Colin, thanks so much. So very practical. Everything you've gone through, the four different steps on scaling, so practical. Really appreciate that. So get the book, Start, Scale, Exit, Repeat. And where can we go for more information about what you're doing, Colin?
Yeah, you can go to startup.club, sign up to that newsletter where we have the time to sell index. And also you can pick up the book on Amazon. We got a paperback, we got a hardcover, we've got the Audible. I love the Audible. It was done by a fellow Canadian who does Budweiser commercials. He makes it quite entertaining. And also we have the ebook as well. So you can, a lot of different formats for you there. I'll tell you this, we wrote the book for ADHD entrepreneurs. We really did. It's 77 chapters, 180 call outs, 30 illustrations. It's won, like I mentioned, 24 global awards. I think one of the ones I'm most proud about is what Forbes did with the graphics and the layouts and just making it so user friendly and just comfortable. It is a big book, I admit that, but starting and scaling and exiting a business is not easy. And
it covers a lot of ground.
It kept coming back to me. Your book is double the size of the average book out there. I'm like, yeah, but I'm not doing this just to get a book out there. I'm doing this to really show the formula of what it takes to succeed. And so I tried to cut, but the reality is it's a bit of a big book, but it's also very digestible. It's broken into those very small, short chapters. But if you want to get a flavor of it, join us on startup.club and sign up to our mailing list. And I do a lot of podcasts, a lot of live shows on Startup Club as well.
Awesome. Thank you, Colin. And thank you, everybody, for listening. If you love this even half as much as I did, please click like below and share this with your friends, because scaling is, I think, the most difficult part of any business. We have a lot of us out there, a lot of our listeners, viewers, are successful business owners. You want to scale, get this book. Watch this video over and over again, listen to it again, share it with your friends, discuss it with your friends, because when you do that, what you'll end up with is way more money and way less tax. We'll see you next time on the Wealthability Show.
This podcast is a presentation of Rich Dad Media Network.